Matt Porzio, you say that the record 2015 for M&A we've been seeing belies uneven prospects for 2016. Why is that?
Yeah, so as you know, Greg, IntraLinks is a leader in collaboration and document sharing technology, probably best known for providing virtual data rooms to M&A deals. So we have this early insight into deal flow as it's happening, typically 6 months before it'll be publicly announced. And so what we're seeing right now is actually a deceleration in growth. Still growing, we're predicting 5.5% growth for the first quarter of 2016, but that's off of 9% growth the previous quarter and 11% growth the quarter before.
And it's really pronounced, this deceleration, in early stage M&A. Why is that?
Yeah, if you look at it, it's, we're measuring deals that are moving into that due diligence phase, right? So those deals will typically get announced 6 months later. We're starting to see that slow down because the sentiment of deal makers, all the uncertainty in the market right now is really weighing on deals.
How much is a potential Fed rate hike weighing on deals? Because we're still seeing deals in the market. I mean, just today, we see a Starwood Marriott deal. So there's big deals out there. But what happens when the Fed comes in?
Yeah, it's interesting. I mean, the mega deals tend to get all the headlines, but we're really predicting the total deal flow in the market, the number of deals that are happening. And that's where we're starting to see this deceleration. The big deals are still going to happen, but they're less than 1% of the overall market. The rate hike, it's a bit of a red herring. You're really not going to see too much effect with a quarter point or even a half point because we're still at historic lows for lending. However, the uncertainty, how quickly will rates climb to a point where they affect deals, is weighing on the minds of deal makers.
And you're also tracking deals in China. So can you tell me what's going on over there? Because if that economy is slowing down, will we see more deals so they can capture growth where it is, or less deals?
Right. So Asia Pacific is definitely where we're seeing a slowdown along with North America. Asia Pacific for 2016 for that first quarter is going to grow at 3%. Still growing, but off of a 30% growth rate the previous quarter. And China is definitely the big drag on that market. Similarly, North America is weaker. China, that uncertainty there is weighing on the global economy and North American deal makers along with the rate hike.
And what does this mean for investment banks? Because a lot of them are already having problems on their trading desks. So if we get a slowdown in deals and advisory work, that's really going to hit the brokerages and investment banks pretty hard, won't it?
Yeah, so the bankers we talk to, our clients on a regular basis, those bankers feel like there's still positivity in the market. We do a sentiment survey to many of those bankers. 43% of them in this quarter were still optimistic about the M&A environment, but that is down from 51% last quarter and a high of 66% a year ago. So the banks are starting to worry about it. They're starting to maybe move some resources around. There's still opportunity, though, for the long term.
All right, well, thanks a lot, Matt.
Thanks, Rick.
And thank you for watching The Street.